Welcome back, everyone. Carl Rosen here, oculoplastics neuro-ophthalmology, primarily oculoplastics, living in Anchorage, Alaska, at Ophthalmic Associates. I have my partner and co-ex-resident friend from back in the old days at Albert Einstein, Department of Ophthalmology, Jon Ditkoff. Jon?
Hello, everyone. I'm coming to you from New Jersey. I've been practicing here for 30 years. As Carl mentioned, we worked together at Einstein, hence Einstein Eyes. And I have to admit, I was just thinking that now I know more people in Anchorage, Alaska, or that have lived in Anchorage, Alaska. In the last year, I've met more people than my entire life. So it's been really exciting.
And we're a good bunch. We're a hearty bunch.
Nice to see everybody.
In fact, we are really pleased to have Peter Wright, a former Alaskan, who is on the channel today. We're going to discuss a number of interesting finance-related topics, but Peter will introduce himself shortly. I did want to mention, former Alaskan, went to Penn for his undergrad. He is founder and president of IntroAct in Boston, an AI platform that matches corporate executives with institutional investors. He's an expert in finance with an extensive background analyzing market conditions, orchestrating significant deals, and navigating the complexities of successful and failing ventures. His insights have been instrumental in identifying companies with the potential for substantial growth and resilience in challenging market environments. I'm almost done, but at IntroAct, Peter has been at the forefront of leveraging technology and data analytics to empower investors and companies, offering a unique perspective on digital innovation and how they drive financial strategies and decision-making processes. Today, Peter will share his insights into the current financial market conditions, the intricacies of making and breaking deals in today's economic landscape, and the critical factors distinguishing successful companies. Please join us in welcoming Peter Wright to Einstein's Eyes. Peter, it's all yours.
Fantastic. Carl, Jon, thank you so much for having me. I am delighted to be part of anything that's Alaskan, has an Alaskan contingency. So thank you very much for having me. Exciting times. How should I start, Carl? Should I, you gave a wonderful intro.
Yeah. I would say, talk about your company, talk about some interesting deals that have been happening, what's on your mind in this space. Healthcare has sort of pivoted and is really focused on AI now and artificial intelligence and where that can take healthcare. I do think that AI as a technology is probably the most profound thing in the last 500 years. So we could go on, but just summarize some interesting thoughts.
Absolutely. So from a deal flow perspective, it's been a tough couple of years. So been in the deal market for about 20 years. The last couple of years, the capital markets have been just about as tough as they can be for completing deals. And I think part of that is just a marketplace with a whole lot of uncertainty and a whole lot of moving parts. So if you look at kind of the market, it really has been a tale of two stories. So 2022 was really a year of a correction. It was a correction where a lot of people were anticipating recession. Capital markets came about in a new way. SPACs, the Jobs Act, and a lot of Reg A type offerings led the market, but traditional IPOs and secondaries were pretty dry. In 22, there was a little bit of relief as rates started going up and people started in the back half of it thinking it wasn't going to go parabolic, and there was light at the end of the tunnel of kind of the inflation hiatus that we went through. And so recently, I'd say from the start of this year, last couple of months, we've started to see capital markets pick up a little bit. So fixed income debt has been fairly steady over that period of time. Equity's been really tough, although in the last couple of months, we're starting to see a little more deal activity.
That's great. That's great. Yeah.
We have spent a lot of time on from a healthcare related, which is just one little segment we have. We've had a couple experiences with SPACs. So that is a dirty word for some, but an exciting word for others. What I can tell you is that structured products and structured asset classes have had a better time in this market, finding a home with investors. But it has definitely been a buyer's market. So investors have been setting terms that are much more egregious and made stocks pricing very difficult in a lot of these names, during that period of time. And I apologize for the background noise. My daughter made playoffs, so I took this call when I'm having an unscheduled game from
What sport, by the way?
Basketball. So
Oh, that's
she's
awesome. Congrats. That's awesome.
Yeah, no, we appreciate that. So Peter,
Absolutely.
if you could just make a few comments on the healthcare space, and what IntroAct is doing, or what your analysts have been thinking about recently.
Yeah. So in general, what we follow at IntroAct is what we call progressive industries. So every sector, a sector would be healthcare, a sector would be financials, a sector would be industrials. Within each sector, there is an industry or a segment of that sector that we call progressive, and we quantitatively define that industry as that which gets the most amount of new capital. And so there's venture, there's private equity, there's public markets, all getting excited about a certain industry. Within financials, it's fintech. Within industrials, it's space tech. Within healthcare, we call it disruptive healthcare. It's probably the most generic of the groups, but part of that is because innovation has been pretty exciting on a lot of different levels for the healthcare industry. Within med devices, it's been largely the intuitive surgicals and the robotic surgeries with a lot of AI around it. Within therapeutics, and I'd consider vaccines there with COVID. Obviously, that's been kind of a hot spot, but from a disruptive perspective, it's been the human genome sequencing, one of the early adopters of AI. So we're in an AI, bubble possibly, but it's early stage. I don't think it's anywhere close to bursting. I think it's, the CEO of Google once said that it's the biggest innovation since electricity, bigger than kind of the .com. I tend to agree with that. I think it's going to touch a lot more people and last a whole lot longer than the .com bubble did, which was a fairly sharp, hype curve. Within every industry, but healthcare included, all the stuff that you think of, I'm a semi guy by background actually, but better, faster, cheaper was more. And I think that's a, fundamental truth in every industry to make it better. So AI is something that can really be attached to any individual, any industry, and make things better, faster, cheaper. Better because you've got more intelligence right at your fingertips. Faster, much faster recall and more accurate recall, and cheaper, of course, replacing a lot of the human input into it.
So
Are you,
Peter,
are you dealing with like radiology specifically, or diagnostics, or it's more of a general perception of medical care?
It's funny you say that. It's funny you bring up as a doctor of radiology. It's always the segment we bring up as a case study on kind of AI touches everything, including healthcare. And that's the one is that we have a very good friend. My daughter actually interned. My other daughter, not the one playing now, but my other daughter interned actually with the head of radiology at Mass General. And she learned a lot about radiology there. Cold, dark rooms, not as much patient, involvement for her is one of the things she learned, but she was impressed with how much AI was actually already being utilized there. And so she shared some of that with me. I think it's going to touch everything. I think, what I hope it does is it allows, my daughter is a pre-med. She's going to Tulane next year. And what she wants to do is clinical work. She wants to work with patients. She wants to spend a lot more time.
I had no interest in radiology for exactly the reasons your daughter described. Never considered that.
But I think that AI is going to enable doctors and people who really want to help people get better and in different ways. I think patient care is no longer going to be constrained by the time of the clock. There's only so many doctors. It's just a reality of how little time, doctors can spend with patients. I think AI is a wonderful situation that's going to make doctors a lot more leverageable.
Right.
Yeah.
We're looking forward to just helping us with decision making.
Do you have any feeling on the negatives? I mean, are you at that point yet where you've seen any negatives of AI in medical care? Or it's not yet at that point where you could really analyze it?
Well, the adoption is probably going to be slower in critical industries like healthcare than a lot of other industries.
Yeah.
Because of a situation that's very common in AI is hallucination. So often AI can extrapolate from itself, its own story, and so that would be very dangerous in critical situations like medicine and direct healthcare. So it is in driving a truck as well, or hallucination is something that is in the world of media where it's prolific already. AI creating a lot of noise and content around certain themes. Hallucination happens, and so the fake news that you're hearing, a lot of that is AI derived. It isn't actually humans deriving it. That it kind of feeds on itself and continues to perpetuate, certain areas. That affects financial markets quite significantly. Actually, that's one of the things that we've seen is, news and content has been. When we got in the industry, it was always about sharing your, sourcing your material, keeping the ones that should be private. Now sourcing material is ever more important for exactly this reason. How things can be tracked back to some type of expertise.
Yeah, we all heard that story about the attorney that I guess a few years ago went to court with an AI document, or basically, and then it was all flawed. So now they're like, oh my God, AI is terrible. But I think my understanding is in legal they're using AI significantly already, and I think it has a really good future. That's my understanding. But as long as there's someone kind of checking it right now.
It's funny, it sounds like I'm telling a joke, but I'm really not. You call your accountant and you have no fear of calling them. You call your doctor, you have no fear of calling them. You pick up the phone and you call your lawyer, you fear it because you know that the clock is running the second you pick up the phone. So that's just the business model of lawyers. So, some type of AI there to assist people with kind of the basics and, the research type questions on topics could be hyper valuable.
Yeah.
It's funny you say that. Carl's known me for a long time. And one thing no one says about me is that I tend to be a laconic. I'm verbose. And the only time I'm laconic is when I speak to my attorneys. I don't talk because I know every single word I say is costing me a lot.
Right. There is that HIPAA issue though with the legal AI, and if you have a document that you pass through a legal translator, an AI translator within the legal space. I think there's many attorneys, and that's why it's not adopted universally, that worry about that, worry about HIPAA and privacy issues. So that's going to have to be worked out. But setting that aside, so Peter, maybe you can't talk about this, but is there anything on the forefront with you or your analysts at IntroAct? You're in the heart of an academic city. You have, a bunch of famous universities that are doing incredible things with incredible research departments. It's very lively. Is there anything that's really interesting to you?
I'll tell you two themes that I think touch on kind of healthcare right now that are fairly significant for us. So the first one, I'll give you the smaller one of the two first, maybe. The first one is that a lot of the markets and a lot of what people are talking about is the Magnificent Seven and kind of the concentration in the market. And there's lots of reasons for concentration beyond AI. The rise of money management from active to passive encourages concentration, and specifically concentration in momentum growth, large cap type names, just mechanically the way it works. Less coverage on the street for small cap names. If you look at kind of representation of healthcare, it is disproportionate. It's a pretty good sector for the smaller cap names, same as financials. Financials and healthcare and tech kind of dominate that. So That's been a tougher group overall to kind of shine. I think the concentration is close to, record peak. So in 1930, in 2000, and where we are at the end of 23 is roughly 75% of the AUM of market capitalization is concentrated in the top 10% of names. And so that's likely the point at where it peaks out. At least that's what happened in the 1930s and 2000, and potentially we're seeing that close again, which would potentially suggest a market top is very close as well, unfortunately, for some that are looking at that. The second theme that I think is more exciting is probably my single biggest thesis, and it brings some interesting asset classes that can be explored for companies that are looking to raise capital. And the theme is that software is eating cities. So if you think of the financial markets and the foundation of it, it largely has been built on the fixed income markets, and the fixed income markets have been built largely on buildings and equipment and collateral that adds to kind of the underlying cash flows. What has happened over the last 20 years is a secular shift away from what I would call CapEx, or investment in hard assets, into R&D, investment in intangibles and intellectual property. And so that has created a new asset class for senior secured loans that are called IP loans. We think this could be one of the next, maybe bubbles, but we think it could be one of the next asset classes that really takes off. A little bit of history on that one. So there was 43 IP loans in 23. It's a fairly new asset class. Aon was the market leader on it. A couple other guys, AJ Gallagher is probably number 2 with their Pious product. They had about nine of the transactions, but they competed more against kind of venture debt. So they took a lot of more, or I should say less mature companies under their wings and financed them. And so the cost of venture debt is in the 20s. The cost of these IP loans at senior secure can be sub 20, 15 to 20, kind of on an IR type basis. And where we think that IP debt can really shine is competing more with the mezz debt layer out there. And so it's for companies that are a little more mature. So companies that are looking at the hockey stick right ahead of them. Sometimes this is the last capital that companies will need to raise to get cash flow neutral or break even. And we think that this asset class fits with that need very well, and we think it's going to explode. Healthcare will be a tremendous benefactor of that. So think of all the healthcare companies that have invested a lot through venture, right to the stage where they now need a significant amount of capital, and they can start looking at debt instead of equity for the very first time. That's the asset class that I think can really explode here in the next couple days, as people feel more comfortable underwriting to intangible as opposed to only tangible type assets.
Very interesting. Huh. Wow. So you've covered a lot of topics. Is there anything else that comes to mind?
That was amazing.
John?
And I think my only last question would be private equity, which we are seeing as clinicians. Do you deal with that at all? I mean, like as an investment vehicle. I know I've spoken to investment banker friends of mine that think it's a failing formula. These companies that buy practices, merge them with this formula that somehow they're going to be more profitable. Do you have the feeling that this is still a good investment? This is still going to be something that's profitable in the future, all the private equity that's taking over medical systems?
Great question. So one of the other themes that I didn't really think of healthcare. So this is probably our second biggest theme is after, IP and kind of software eating cities, is that we live in the second Gilded Age. And what I mean by that is the cost of capital has never been more important. The regulation of monopolies has never been as laxed as it has since the Gilded Age. And private equity has an inherent lower cost of capital than a lot of the competitive landscape that it looks to consolidate. So there is inherent wealth in that strategy, and it's why there's such concentration of assets in the private equity sector right now. So public market deals not really happening, starting to pick up a little bit, but it's very little. Venture dry, private equity vibrant. And so even to the point of the public deals that have happened, SPACs and such, a lot of the structured product actually was funded by traditional private equity type investors. So they've got a lot of dry powder. And they're the guys that can just structure these deals. So 1+1 = 3 is something obviously a lot of people have been after for quite some time. Less industry specific, but it works every time. But the big advantage is if you have a lower cost of capital to accomplish it.
Right. So just to give you some background, Peter, we've talked about private equity and leverage buyout on the channel a number of times. We've seen it in medicine. My practice has been approached. My surgery center has been approached. We opted not to do that. But then when I dug into it and I looked at their methods and their equations and the use of leverage or debt within the entity that they're going after, it's a bit, unless you really understand and you've taken a finance course somewhere, you can get steamrolled. Jon and I, we've spoken and had some guests talk about it as well. It's a really interesting area. I wonder about the viability of it, although I do know that many people have gotten very wealthy off of it. It does scare me a bit, but
yeah. The biggest advantage of private equity is having a war chest of capital. So everybody sets their model. Everybody is putting their best thoughts on what could happen. If things work out great, everybody makes money. If things don't work out great, guess what? The guys with the money get a great entry point to come in for round 2. And often that leaves a lot of the entrepreneurs and the people doing all the work punished more than probably deserve it. And that's one of the drawbacks of the model, for sure.
Yeah, no, it can be really damaging. And that's where, again, Doc's smart, intense group, but they don't understand that side of it. That's just not something you learn in medical school. But really interesting stuff. I think we're going to stop there.
Wonderful.
Peter Wright.
How can we tune into this basketball game? I mean, I want to be able to.
Hey, look, I'd love it. So actually, the game that got him here was truly 2 foul shots. They had to make them both to be able to tie it up to go to overtime, and they ended up winning by 4 yesterday. So exciting game. So
Beautiful.
Well, listen, I wish you luck with it.
Yeah,
is this the finals now, or it's just a continuation of playoffs? Is this finals tonight, or it's still
semifinals? So then, if they win this one, finals are on Wednesday. So,
right. Well, I wish you luck with it.
Good.
Thank you guys so much.
Yeah, no, thank you, Peter. Don't go anywhere. We're going to say goodbye to our audience, please.